Wall Street indices end lower as investors weighed President Donald Trump's new tariffs aimed at foreign automakers. Dow Jones loses 155 points. Markets in Asia Pacific mirror Wall Street moves. The gift nifty is indicating a lower start for the Indian market. Oil prices edge higher on tightening of crude supplies along with the new U.S. tariffs and their expected impact. Gold scales to a record all-time high on safe haven buying. The Nifty index undergoes a series of changes from today. Jio Financial Services and Zomato will now be included and will replace BPCL and Britannia Industries. Market regulator SEBI recommends limiting expiry day to either Tuesday or Thursday for all equity derivatives, following which NSE differs plan to change weekly expiry day to Monday from Thursday. The government plans to raise 8 lakh crore rupees or 54% of its FY26 borrowing target through dated securities in H1 of 2025-2026. This includes a 10,000 crore via sovereign green bonds. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. How is Friday looking like when you look at it in terms of the market, and when you're looking at it for the Asian markets? They're mirroring the US markets. So Asian markets have opened up a bit subdued in today's trading session. Taiwan index, that's down almost 1%, but Hang Seng, that's managing to hold on to gains of 0.5 to 0.6% in today's trading session this morning. Nikkei, that's trading in the red, down almost 2%. We have Shanghai, that's trading in the red, down 0.1%. On the flip side, ASX 200, that's managing to hold on to some bit of a green. So, mixed signals are coming in from the Asian markets. Most of them are in the red, couple of them in the green. Nifty implied open, that's an important one to watch out for our Indian markets. It's down 24 points, so a bit of a negative bias is what is indicated. But that was a trend yesterday as well, right? It indicated a negative bias. It started in the red, and then we did see that recovery coming in for the market. Is that going to be something that we're watching out for? This is the April series that has started, so we'll keep an eye out on the Nifty. As of now, a muted to a slight bit of a negative start is what we are watching out for from the Indian markets. But let's move on and talk about US market, what the handover actually came in from US, that Wall Street ended quite lower in trade, especially in that overnight trading session. Dow fell almost 155 points, S&P 500 slid 18 points, while Nasdaq dropped over 94 points. Now, this move is coming in after President Donald Trump announced a 25% tariff on all cars that are not made in the United States. CNBC's Steve Kowak is joining with us to give us a wrap on what happened on Wall Street.
Markets were lower on Thursday as investors reacted to President Trump's new tariffs aimed at foreign automakers. The Dow was down 155 points, the S&P 500 fell by 19 points, and the tech-heavy Nasdaq saw a decline of 95 points. The nonpartisan Congressional Budget Office released its latest long-term budget and economic outlook report today. The agency projected significant increases in federal budget deficits and debt over the next 30 years. The report finds that is in part due to a mix of slower population growth and more dependency on immigrants working to sustain growth because of lower birth rates. The CBO estimates U.S. public debt will rise to 156% of GDP in 2055. President Trump's tariffs, tax cuts, government firings, and immigration crackdown were not factored into this outlook. And first-time applications for unemployment benefits held steady last week in a sign the labor market remains healthy. Jobless claims fell by 1,000 to 224,000 for the week. That's according to the Labor Department. That was roughly in line with analyst forecasts. The filings have not yet shown a significant increase in applications for unemployment by federal workers, but claims in the D.C. area have risen, likely reflecting layoffs of government contractors and others who rely on government funding. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But that's all the global market action that we have coming in overnight. How is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for, as well as what are we expecting in the world of F&O. Now, let's start by setting you up for trade this morning. Yesterday, what we saw, that markets did see a bounce back coming in. So Sensex, that rose almost 318 points. Nifty was up more than 100 points. And Nifty Bank also saw an uptick of around 350, 360 points in yesterday's trading session. So, yes, we did see that comeback coming in, the bounce back coming in from Wednesday's lows. So, that is something that we're watching out for. Sectors that were performing well yesterday, PSU Banks Media were among the top sectoral gainers. On the flip side, obviously, because of those Trump tariffs that came in on the auto sector, we saw Nifty Auto that was down. Nifty Pharma also a bit jittery in trade and down 0.4%. FIIs were buyers in yesterday's trading session as well. DIIs continue to be buyers as well. But do not forget, in the FIIs numbers that you're seeing, we're seeing that Nifty rejig. So that is something that is, surely adding to that buy number that's coming in for FIIs. So that is that adjustment that we should keep an eye out on. What are we keeping an eye out on for today's trading session? We do have the US CPI data for February that will be coming out later this evening. So keep an eye out on that. Any more updates coming in from Trump on tariff measures? What is that update there? Keep an eye out on that. GDP growth data that came in versus the estimate, it was in line. 2.4% was the GDP growth that came in. Estimate was 2.3%, so keep an eye out on that. But quarter-on-quarter basis, a bit of a slowdown that we're seeing. And lastly, FII flows, are they going to be continuing in India? That's an important factor to watch out for. For the month of March, FIIs were net buyers, so that is something interesting there. But let's move on that front and get you important stocks to watch out for in today's trading session. We have Sudarshan here. Good morning, Sudarshan.
Good morning, Vinny. So we'll start with BSE because SEBI has released consultation paper proposing, basically it has proposed that expiry days to be limited either on Tuesday or Thursdays, and after that NSE has deferred its plan to change the weekly expiry date to Monday from Thursday. Also, M&M and Force Motors, both the companies have bagged defense order of rupees 2,500 crore, of which for Force Motors order is for 2,978 vehicles and total order is of 5,000 light vehicles. BEL, that is Bharat Electronics, announces order of 1,385 crore, and with this FY25 order inflows for BEL has crossed 18,000 crore. Samvardhana Motherson says US auto tariff will not have material impact on the financials as most products supplied by the company in US are either manufactured in US or it's compliant with the Mexico agreement that US has. Asian Paints has increased project cost for VAE and VM unit in Dahej by more than rupees 600 crore. JSPL is declared successful bidder for Sharadpur Jalatap East Coal Block, and also it has signed agreement for the same block. DSM Shriram to invest rupees 131 crore for setting up integrated compressed biogas plant in UP. CESC has signed power purchase agreement with the UP power regulator, and Geo Finance has announced that it will be investing 85 crore in Geo Payments Bank, and with this their stake will increase to more than 85%. Bharat Forge, its arm Kalyani Strategic Systems, has formed JV with Spain's Duma Engineering. And last one is Geo Financial, Zomato, BPCL and Britannia. Geo Finance Zomato will enter Nifty 50 and Britannia and BPCL will exit Nifty 50.
Thank you so much for that, Sudarshan. Important stocks to watch out for in today's trading session there. But Mangalam is here to tell us what are we expecting in the world of F&O this morning. Also, the beginning of a new series, right, Mangalam? So what should we keep an eye out on?
It's the beginning of a new series. So what we say hello April. Why do we say that? Because over the last 10 Aprils that I've seen in April series, the Nifty has ended lower just twice. So that's a positive. If you look at April 2022 and April 2015 was where the Nifty saw a red close. Otherwise, it's been either a big green close or maybe a mild green close itself. The other part is that, the Nifty in the March series has gained about 1,047 points, broken the 5 series losing streak, and that's a big positive. Add to that, the rollovers have been slightly on the lighter side. So we're starting April series with a lot of light weight. The April series actually is starting with just 76% rollovers and 1.25 crore shares at the open interest in terms of the start of the series itself. And that compares with an average of close to around 1.5 crore shares as well. And the FII long exposure at the start of the series is 40%. Remember, over the last 4 or 5 series, the FIs have been starting on a very somber note when it comes to long exposure, 16, 18, 11 odd percent itself. And now at 40% long exposure, the FI long exposure is the highest that we've seen all the way since October itself. On the other hand, the clients, which is the HNIs, etc., they've reduced their long exposure. So they are starting this series with 51% long exposure itself, which is on the lower side. What can be the big movers or triggers for the April series itself? The start of the April series brings you, the Trump tariff-related news. Then you have the RBI monetary policy outcome. And thereafter, you will also have the Q4 FY25 results and previews. That will be an important one to watch. And then you have global and geopolitical developments which will keep the market afloat. The key question to ask, will the rally sustain or will there be consolidation after a 1,000-point up move in March?
Thanks so much for that, Mangalam. Surely saying hello to April, but what are we saying in terms of the regulators' note coming in, the paper that they did have from SEBI for the proposed change in expiry dates for derivative contracts? What is this actually meaning and what does it indicate now?
Well, it's a very important development that has come in yesterday. The most important part is that the SEBI has issued a consultation paper on the final settlement day, which is the day of expiry, as we call it, for derivatives. They want to keep all the derivatives contracts expiry on either Tuesday or Thursday itself. As of now, we have a couple of expiries that happen on Monday, which is the BSE, BankX, and the NSE, which happens on Thursday. And they're saying that the exchanges must seek SEBI's nod to modify, launch a contract or an expiry day itself. And they will expect shareholders' comments by 17th of April itself. Now, on the back of this, what has happened is that the NSE, which had earlier planned to change the expiry day to Thursday, to Monday from Thursday, has now deferred that plan. So the expiry stays on Thursday itself. Why is this important? Because remember, BSE has their BankX expiry on Monday, and NSE changing that to Monday would have meant volume being shared away from the BSE into the NSE. And on the back of that, we have seen a big decline in the BSE share price itself. Now, with the NSE deferring that, could we see a big positive for BSE? Would be the big question, and that's exactly what the street is penciling in as well. BSE from the lows has seen a bit of a recovery. Yesterday it was higher on account of the bonus announcement as well that came in, and now with this there could be further up move which is expected for the BSE.
Absolutely, Mangalam. Thank you so much for giving us those details there. But on that note, we'll step into a very short break. After the break, we'll get you details from government's borrowing calendar for the first half of the next fiscal year. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. And the Ministry of Finance said that the government will be borrowing close to 8 lakh crore rupees, and this is from the market in the first half of FY26. Sapna is here to bring us more details on this one. Sapna?
Well, the government will be borrowing 8 lakh odd crore during the H1 FY26 as far as the market borrowing numbers is concerned. This is roughly around 54% of the full year's borrowing aim of 14.82 lakh odd crores. Not much of a surprise there, so to speak. Also, around 10,000 crores worth of sovereign gold bond issuances will be done during April-September. We also need to understand that no new GSEC tenor has been announced. The same old tenors are going to continue. Of course, around 26% of the H1 market borrowing is going to be conducted through the 10-year paper. Also, the WMA limit has been pegged at 1.50 lakh crore. This is basically to take care of any temporary mismatches in cash balance of the government, if that's what the situation turns out to be. Net, the government has also reiterated that it will be doing switches and buybacks of GSECs during the H1 market borrowing program. Also, if you look at the budget number, well, 2.50 lakh crore worth of switches are already mentioned. And this basically helps the government to smoothen out its redemption profile. Also, if you look at the kind of redemptions that are there in FY26, and along with the switches that they're planned, so there's a big program in terms of repayment of the COVID borrowing. So FY26 is heavy as far as that is concerned, and hence, all these measures, all these steps that are there in terms of the market borrowing program will help to smoothen out the redemption profile. So net 54% of FY26 borrowing is going to be done in H1, April-September. More or less on track, no great surprise here.
Okay, thank you so much for that, Sapna. But on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll get to what's happening in the world of commodities. Welcome back to Power Breakfast on CNBC TV 18. Now, let's get you the latest update on Trump-related developments. We have Dia joining in with us in our special segment, Trump Watch.
Automakers were battered on Thursday after US President Donald Trump announced tariffs on imported vehicles and parts. In the US, General Motors gave up almost 7%, while Ford's dip was just shy of 3%. Japanese car makers Toyota, Honda and Nissan shot up to 2.5% each. Seoul-listed Hyundai fell over 4%, and European majors like Volkswagen, Porsche, Mercedes and BMW fell up to 2.7%. India's Tata Motors, which exports Jaguars and Land Rovers to the US, lost more than 5%. While Trump's latest tariff announcement sent ripples through the automotive industry, Tesla managed to hold on to gains, adding nearly $14 billion to its market capitalization, significantly outpacing the combined losses of its US competitors. Now that US President Donald Trump is moving ahead with tariffs worldwide, Mexico's economy Minister Marcelo Ebrard said that Mexico seeks a lower fee than others for its export to the US. He also added that most vehicles exported to the US from Mexico have a high percentage of parts manufactured in America, a result of heavy integration of North America's auto industry. Russian President Vladimir Putin said the country considers US's plans to annex Greenland serious and worries that the West could use the Arctic as a springboard for future conflicts. He also added that it would be a deep mistake to think that this is some extravagant talk from the new American administration, and that is nothing of that sort. Lastly, a US judge on Thursday ordered the Trump administration to preserve messages from a Signal chat group used by President Trump's top national security officials to discuss plans for an attack on Yemen. That's all for today. Back to you, Vinny.
Thanks so much for that, Dia. But let's go across to Manisha, who's here to tell us what's happening in the world of commodities. Good morning, Manisha. Friday and gold is glittering bright.
No, it is, and yet another all-time highs. I mean, this has been an amazing year when you look at gold bulls here. So we are at $3,070 an ounce and above that as well. And if you look at the gold futures, we're already trading above $3,100 an ounce. Well, there is renewed safe haven buying. U.S. is imposing 25% trade tariffs on all automobile imports. U.S. will announce reciprocal tariffs against 15 major U.S. trading partners on 2nd of April. And most trading partners have threatened retaliatory measures. So this is far from over. This whole trading war is continuing to give safe haven buying in case of gold there. Apart from that, if you look at silver, we've seen 3% of gains overnight into this one. Platinum was up 2%. So everything in precious metals clearly has been getting more precious. I also want to talk about the crude oil prices, where we are trading at a one-month highs right now. This is going to be a third straight week of gains for the crude oil prices. Well, U.S. on Tuesday has imposed 25% tariff on potential crude buyers from Venezuela. U.S. also has put sanctions on Iran oil sales. U.S. inventories for crude have continued to decline. So all of those factors clearly supporting the markets. The only one area that hasn't done so well today has been the base metal prices, slight profit taking therein.
Okay, Manisha, thank you so much for that. But with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.